With the HTG and Kottke Associates merger now complete, Chris Hehmeyer, CEO of the newly renamed Hehmeyer Trading Investments, spoke with JLN about the firm's push into the managed futures space and opportunities ahead.
HTG was the merger of the old Hehmeyer Trading, which came from Goldenberg Hehmeyer Trading, and we split that up, and I took HTG then and merged it with Harrison Trading. Then we just recently took over Kottke Associates, and we had a CTA called Janla, and all of those names were starting to get confusing, and so we decided to come together with one name. We put it all under Hehmeyer. Trump was taken. There's three lines of business. The prop trading business, which we've had and has been the business that we've been in for a number of years, and that will continue like it is. With the Kottke acquisition, we added two businesses that have registrations at the National Futures Association, an independent IB, and a commodity trading advisor, commodity pool operator. So the three lines of business are the prop trading, the agency business or brokerage business, and the advisory business, CTA, CPO. The CTA business is the place where we really want the brand to grow. We see opportunities for managed futures going forward with innovative products. There are a number of 40 Act funds and ETFs now, and the ability to bring those products to market for managed futures we think is something that's going to grow. There's all kinds of ways to approach managed futures. And the regulations are extensive about all of it, but there are ways to bring innovative products, we think, in managed futures to the marketplace for investors. But we want to be innovative for bringing alpha to investors in a way that's more accessible to investors. Oftentimes that's been in managed futures products that are difficult to get to because of the nature of the regulation. And of course, all of this has got regulatory structure that has to be honored and watched carefully, especially because we have a proprietary trading business. And we're fully aware that there are conflicts of interest there. All those conflicts have to be divulged, and all of those conflicts have to be made apparent to any investor that we would like to have come to Hehmeyer. But the ability to try to bring innovative products is being enabled by the technologies, of course. And in the prop side, we oftentimes see a trader or a person that's got trading strategies that will lend itself to scale and will lend itself to going out and bringing outside investor money to that strategy. And so we want to be able to bring traders that we see when the occasion arises to deliver alpha to investors above and beyond the typical indexes in futures and above the stock market beta. The IB business is the smallest part of our business. It's mostly an allocation business. We have a good little tool that Kottke developed that allows us to distribute trades once a trade's done by a manager, typically in a block trade, to different FCMs for different managed accounts. And that's a good little niche business for us, and we'd like to continue to develop that. The client base will be the CTAs of the world. Well, the great thing about futures markets is that they're liquid and they're deep, and so it, I believe, lends itself to strategies for investors that want to be able to have real flexibility to add to a portfolio or to get out of a portfolio quickly. And that's one of the great things about futures markets. And so we think that these products, being able to deliver managed futures products with equity returns, will enhance an investor's return over the long term. And that's something we're really excited about delivering.